How much interest do I owe at closing? My name's Evan Kaufman, your Loan Educator, here to help explain. Now, when you're going to close on a home, the date that you choose to close can have a big impact on your overall closing costs. Why is that? One key component of closing costs is what's called prepaid interest. And this is the amount of money that you're paying for your mortgage during the month of when you closed. What exactly do I mean by that? We might have heard before that when you make your first mortgage payment, it's not made that immediate next month. It's generally made the following month. So let's say I closed in January. My first payment wouldn't be February 1st. It would be March 1st in most cases, unless you're closing at the early part of the month. And we'll talk about that advanced topic here at the end. You can adjust that. But typically I close in January. My first payment will be March 1st because mortgages are always done in arrears, meaning that, hey, you're going to live in the home for February and then make your payment from living in the home February on March 1st. But what happens to that little bit of those days that you own the home in January? Well, that's the prepaid interest on your closing costs when you go to sign and close on your home. This means that if you close early in the month, that prepaid interest is generally higher than if you close later in the month. Why is that? Remember, you're going to make that interest payment for that partial month at closing. So if I'm closing January 1st, I've got to make all those days of interest payments at closing. Because remember, we as a lender aren't collecting until March 1st. We're going to collect March 1st for February. So how do we get January's payment? We put that up front at closing. So if I close at the start of the month, then I'm going to have more prepaid interest due at closing. Yes, my first payment's further away, but I'm going to have more prepaid interest up front. But if I wait till later in the month and close on, say, January 31st, then you only have a day of prepaid interest. That could be a big difference than having 30 plus days of interest if you closed earlier in the month. So that's how you can see your closing costs drastically change. Sometimes people say, hey, Evan, I want to wait to close until the following month so that I can have my first payment later. We say it's wonderful, but the math generally works out to be about the same because even though your payment would technically be a following month later, you're going to have to pay for prepaid interest during that whole month if you close early in the month versus closing late in the month. So just know that prepaid interest can drastically change your closing costs. How much so? Well, let's say you're purchasing a home. The prepaid interest could easily be $50 per day. So if you have 30 days of prepaid interest on there from closing early in the month, that's $1,500. But if you're closing the last day of the month, it could only be $50. So that could have a big impact again on those closing costs. So knowing it, that could be a trick for if you're ultimately trying to buy a home and keep your closing costs down up front, that upfront bill. Hey, close later in the month. Yes, your first payment will be due a little sooner, but you won't have as much due up front at closing. If you want that longer time frame till that first payment, or you're getting a lot of seller credits and you're figuring out how to use them, because seller credits can generally be applied towards that prepaid interest, then you could close earlier in the month and it's going to cover it right back up. Just know that the day that you close can have a big impact. Now, I mentioned earlier, there's a little trick to where if you close early enough in the month, you can change up when that first payment is. That's what we like to call negative interest, or this is where effectively you decide you're going to close generally within the first 7 days of the month. Let's say you're going to close on January 1st and you're like, hey, Evan, rather than have my first payment be due March 1st, I'm cool with it being February 1st. Okay, we can adjust it so that ultimately your first payment will be February 1st. And in that case, you'd actually get a small credit for prepaid interest because you're going to make your payment February 1st for the full month of January, but you might not have owned the home for the whole month of January. If you closed on January 5th, then you didn't own the home those first few days, so you get a credit for that. So that's a unique scenario where that can be changed. Sometimes that works well for purchases, but it can often work well too sometimes for refinances. That's a more advanced tip here at the end. Overall, just know that the day that you close has a big impact on the prepaid interest that you have to make, the prorated interest that you're making at closing, which impacts your closing costs. Hope this helps explain that prepaid interest that you have to deal with. My name's Evan Kaufman. Take care.